If you're freelancing, 1099 contracting, or your small business involves driving, then you can claim car-related tax write-offs. What is up, everybody? My name is Tyra, and welcome back to Keeper Tax, your one-stop shop for all things 1099 taxes. Here on this channel, we create resources for freelancers, independent contractors, gig workers, and anyone else who files or should be filing business taxes. Welcome back to another episode in the 1099 Tax University series, where I give you the tax content you need to set yourself up for success as a gig worker. In our last video, we talked all about the actual expense method versus the standard mileage method, and how knowing the difference between the two can save you so much money on your taxes. If you missed that video, it will be linked down below, and you can find it on our channel under 1099 Tax University. But today, we will be diving deeper into the actual car-related expenses that you can write off. So let's get into the video. What actually counts as driving for work? So let's set something straight about mileage before we dive into the actual expenses. As you may know, rideshare workers and delivery drivers can claim their work miles on their taxes, but you don't have to be an Uber driver or a traveling salesman to claim car-related tax deductions. Even if you spend the majority of your time in a home office, you can still claim your occasional supply runs or trips downtown on your taxes. Let's say that you only drive for work for 3 months out of the year. You can still write off all of those car expenses that you incurred during those months. So if you fall into that category, here are some more business mileage write-off examples. You can write off miles incurred driving to a client, driving to a professional conference, driving to a meeting, driving to meet a client for lunch, or even driving to the post office, the bank, or even Office Depot or Staples for anything work-related. Now, let's talk about what miles you cannot write off. So the only exception to driving for work miles is what the IRS likes to call commuting miles. So if you work from a formal office space, then the miles that you drive to and from work are not considered driving for work. But if you work primarily from home, then any miles that you incur for business meetings or running errands and all of that stuff, that will count for business miles you can write off. So why was it important for me to say this? Because you can use the amount of miles that you drove for work to calculate your vehicle business use percentage, which you will need when you are finding your tax savings for the actual expense method. You can also use a timesheet if you have it, or some sort of log. You could even use your calendar if you use the location settings in your calendar. Contrary to what some ultra-conservative accountants may tell you, you do not have to keep a line-by-line mileage log of everywhere you've ever driven in order to calculate your business percentage. But if you are nervous about it, then always take a slightly lower percentage. So if you came up with the number 60%, then use 50%, and taking off that 10% will be your room for error. Tax-deductible car expenses. So there are a few expenses that can be replaced with the standard mileage method if you decide to go that route. But if you're using the actual expense method, you will write off each expense separately. And those expenses that you can write off are gas, insurance, lease payments, maintenance like tire rotations, your yearly inspections and all of that stuff, oil changes, the cost of the car, and if you finance your car, then you can write off your own car payments. That is huge. You can even write off a portion of the original cost of the car if you bought it a few years ago, which is depreciation. If you choose the standard mileage method for your vehicle deductions, then all of the expenses that I just mentioned would already be included. But there are more expenses that you can write off on top of those expenses when you are using the standard mileage method. And those expenses are things like parking. Let's say that you have a monthly parking fee to use your co-working space, and that's where you have all of your business meetings instead of having your clients come into your home office. That would be deductible. You can also write off your tolls, which is another huge one, especially for my people that live on the East Coast. I used to live on the East Coast and I used to travel on the Parkway and the Turnpike faithfully, so I feel you guys on that. You can also write off car washes and your DMV fees, like your car registration and all of those fees that you would have to pay at the DMV. So in general, we at Keeper Tax believe that a good rule of thumb to decide whether to use the actual expense method or the standard mileage method when deducting your car expenses is, unless you drive over 30,000 miles a year for work, then you will save more money by claiming your car expenses using the actual expense method. So I'm not gonna lie to y'all, the actual expense method can be a little heavy on the bookkeeping side, so you need to keep a record of gas, car payments, insurance, registration fees, car services, and all of those expenses. If you're deducting your actual car expenses, then you should track the amount, the merchant, the date, and the purpose of each of your car expenses. And this is just in case you get audited. If you care about that kind of thing, you want to have a log so you can give it all to the IRS if they are asking for it. And you also want to track your miles, your business versus personal miles, so you can use that number to get your business use percentage like we were talking about earlier. This can honestly be pretty time consuming, and if you're like me, you can put it off because it's not really something that you enjoy to do. Luckily, there are a ton of apps out there that can help you, but my personal favorite is Keeper Tax. Keeper Tax is an app that will automatically monitor your purchases for write-offs you would have missed. And get this, at tax time, you can file your taxes directly through Keeper Tax. Or if that's not your jam, you can seamlessly export all of the information Keeper Tax tracked for you, and you can use it when you are filing. Just go to keepertax.com to get started today. So what if I just started tracking my expenses or my miles? That is okay. So the IRS will allow you to deduct your car expenses or mileage if you can reasonably prove the number of miles you drove or the amount that you spent on your car in a given period. So if you know your mileage or car expense data from August to December of a year, you can see what the average monthly expenses were for that time. And if you can prove that it was roughly the same through January to July of that same year, then the IRS will allow you to deduct the average amount for those months as well. But remember, it is as long as you can reasonably prove that it was that amount. You can also tally up your miles using records besides a mileage log. So if you drive for Uber or Lyft, you can look through your ride history for that mile info. And I've even used my calendar, like I mentioned earlier, to figure out how many miles I drove in any given month. It is super important for me to always add a location to my appointments. So if I need to retroactively calculate my miles, I could just search my calendar and tally the miles up that way. And pro tip, I have an iPhone. So the way I keep mine separate is I will create a specific calendar for any business or work related appointments, and I will make sure that I put all of my appointments under that calendar. So if I did need to access those addresses for mileage purposes, I would just select that calendar and look at all of the locations that I have saved for that month or that year. So remember y'all, the best way to track your expenses is at the time that they are incurred. And tracking your expenses as you go will prevent you from missing out on any deductions, or you could just use Keeper Tax and that'll be a lot easier. Thank you guys so much for watching this video, and as always, let me know if you have any questions down below, and always do your own research on the IRS website to get the most up-to-date and accurate information. And if you would like more easy to digest tax content, make sure that you give this video a like, and if you're not already, make sure you hit that big red subscribe button down below, and make sure your notifications are on so you can get all of the alerts on any new 1099 tax videos that we post. Thank you guys so much for watching, and I will see you in the next one.